What is happening, crypto enthusiasts, and welcome back to Bitcoin Bulletin. The market is absolutely electric, a whirlwind of action and opportunities that you simply cannot afford to miss. We're talking about shifts, signals, and strategies that could redefine your portfolio. Get ready, because the pace is relentless, the news is breaking, and we've got the inside track on what's moving the needle right now. You're about to get the unmissable updates that will keep you ahead of the curve. First up, we're diving deep into the foundational strength of Bitcoin itself. Is the network growing stronger even as prices consolidate? Then, we're tracking a significant capital rotation that could signal a major shift across the entire crypto landscape. We'll also break down the latest on Bitcoin's market dominance and what it means for the altcoin season that everyone's talking about. And finally, we're dissecting a major strategic move from a key institutional player that's raising eyebrows and impacting market sentiment. You do not want to miss a second of this. Hit that like button, subscribe if you haven't already, and ring that notification bell so you never miss an update. Bitcoin's fundamentals are soaring, a bullish signal. Is the bedrock of the digital asset world getting even stronger? Recent analysis suggests that Bitcoin's underlying fundamentals are not just holding steady, but actively strengthening, painting a potentially bullish picture even amidst periods of price consolidation. Swissblock Technologies has highlighted that both network activity and liquidity have seen a significant acceleration, creating conditions that historically have preceded major upside movements in the market. Their Bitcoin Fundamental Index, or BFI, is climbing, indicating that the market might be entering a constructive phase where robust fundamentals are aligning with corrective price action. This divergence, where the BFI rises while the price experiences resistance, is a key signal that structural demand for Bitcoin continues to expand, even if short-term traders are reacting to volatility. In previous cycles, such divergences have often served as a precursor to powerful rallies once market sentiment catches up with these underlying on-chain and liquidity trends. With Bitcoin consistently holding above significant price levels, analysts are pointing to the long-term trajectory remaining firmly intact. If these fundamental strengths continue to build, Bitcoin could be on the cusp of another breakout phase, potentially challenging and surpassing its previous all-time highs in the coming months. This data suggests that price dips might not be a sign of weakness, but rather opportunities to build a foundation for future growth. But is this strength mirrored across the wider market? Prepare for a major capital rotation that could shake things up. Whales making waves, a big shift to Ethereum. Is a seismic shift in capital allocation happening within the crypto ecosystem, potentially signaling a new era for altcoins? Reports suggest that significant players, often referred to as Bitcoin whales, may be diversifying their holdings and pivoting towards Ethereum. This move, if it continues, could represent a crucial rotation of capital that has profound implications for the broader cryptocurrency market. The narrative of Bitcoin's dominance has long been a central theme, but recent data indicates a potential weakening of its grip. As Bitcoin's market share experiences a decline, falling below key thresholds, it opens the door for alternative cryptocurrencies, or altcoins, to capture investor attention and capital. This phenomenon, often termed altcoin season, is characterized by a period where smaller, often more innovative projects see significant inflows as capital moves away from the market leader. Ethereum, in particular, appears to be a major beneficiary of this trend, with its market share seeing a notable increase. This growth is bolstered by strong inflows into Ethereum-based exchange-traded funds and a substantial amount of liquidity within its decentralized finance, DeFi ecosystem. The attractiveness of Ethereum is further amplified by its role as a foundational asset in the rapidly evolving digital finance landscape. Beyond Ethereum, other altcoins are also showing promising growth trajectories. Projects like Sway, a newer Layer 1 blockchain, are gaining traction due to their efficient transaction processing and active development, drawing comparisons to the early growth phases of other successful networks. The overall sentiment in the market is shifting, with institutional investment in crypto reaching significant levels and capital diversifying beyond just Bitcoin. This diversification is being influenced by macroeconomic factors, including expectations of potential rate cuts from central banks, which tend to increase investor appetite for riskier assets. As the market anticipates these macroeconomic shifts, the rotation of capital into altcoins is expected to continue, potentially reshaping the dominance landscape and creating new opportunities for investors looking beyond Bitcoin. But what happens when a giant makes a bold move? We're looking at a major institutional player's strategic sell-off. Bitcoin's dominance wanes, altcoin season ignites. Is the reign of Bitcoin dominance starting to crumble, paving the way for a vibrant altcoin season? Recent data indicates a significant shift in capital flows, with Bitcoin's market share experiencing a notable decline, potentially signaling a turning point for the broader cryptocurrency market. For months, Bitcoin has held a commanding position, but its grip appears to be loosening as investors increasingly turn their attention to alternative cryptocurrencies, or altcoins. This phenomenon, often dubbed altcoin season, is characterized by a period where smaller, often more innovative projects see substantial inflows as capital rotates away from the market leader. Bitcoin's market share has reportedly dipped below 58% in August, a move that breaks a significant two-year trend line and creates fertile ground for altcoins to flourish. This decline, while seemingly modest, is a critical indicator for market participants who track these trends closely. The broader crypto market itself has seen substantial growth, reaching over $4.1 trillion in August, with a significant portion of this expansion attributed to altcoin inflows. Institutional investment in crypto has also surged, reaching $2.5 billion, with capital diversifying beyond Bitcoin into a wider array of digital assets. Analysts attribute this capital rotation to a combination of factors, including evolving macroeconomic conditions and the growing anticipation of potential Federal Reserve rate cuts, which tend to boost investor risk appetite. Ethereum has emerged as a primary beneficiary of this trend, with its market share climbing to an impressive 14.5%. This surge is supported by record inflows into Ethereum-based exchange-traded funds and a substantial $127 billion in decentralized finance, DeFi liquidity, underscoring its foundational role in the digital finance ecosystem. Other altcoins are also making significant strides. The Layer 1 blockchain Sway, for instance, is gaining traction with its low transaction fees and rapid development, drawing comparisons to the early growth stages of Solana. The Altcoin Season Index, a key metric for tracking market sentiment, has risen significantly, indicating renewed interest in these alternative assets. Among the standout performers, Chronos, CRO, has experienced an extraordinary surge, reportedly increasing by over 120% in a single week, largely driven by strategic partnerships that integrate its utility token into popular platforms. As this capital rotation continues, analysts are debating where Bitcoin's dominance will ultimately settle, with predictions ranging from stabilization around 50% to a further drop to 35%. The current environment, fueled by macroeconomic optimism and growing institutional adoption, strongly supports the continued momentum of altcoins. But even the giants aren't immune to strategic adjustments. We're examining a major sell-off by a key institutional player. Galaxy Digital sells big, volatility ahead for Bitcoin. Has a major institutional player just signaled a shift in market sentiment with a significant Bitcoin sell-off? Galaxy Digital, a prominent firm in the digital asset space, has reportedly sold 1,167 Bitcoin, marking one of the largest notional trades in its history and sparking discussions about market volatility and institutional strategy. This move comes at a time when Bitcoin's price has seen a dip below the $110,000 mark, raising questions about short-term weakness and potential further declines. The sale by Galaxy Digital occurs against a backdrop of heightened on-chain activity and evolving institutional engagement within the cryptocurrency markets. While Galaxy has been actively involved in developing infrastructure and investment strategies, including significant projects in the data center space, this substantial Bitcoin sale suggests a recalibration of portfolio positions in response to shifting market conditions. Bitcoin's price action has displayed signs of consolidation, with on-chain indicators suggesting that while long-term holders remain steady, short-term trading activity has decreased. This pattern can often precede periods of price stagnation or mild declines, though some analysts believe it could also set the stage for a larger bullish move once selling pressure subsides. The market is currently navigating what is described as the third phase of the current bull cycle, a phase often characterized by capital rotation into alternative cryptocurrencies before a potential return to Bitcoin later in the cycle. On a technical level, Bitcoin's price chart has formed a megaphone pattern, indicating expanding price swings and intense volatility. A critical support level around $108,724 is being closely watched, as maintaining this threshold is crucial for preventing further downward movement and for potentially retesting higher resistance levels. While some technical indicators, like the check-in money flow, are showing positive signs and suggesting potential inflows, the market remains sensitive to broader economic factors. The anticipation of U.S. Federal Reserve rate cuts and the potential approval of spot ETFs for altcoins are key macroeconomic elements that could significantly influence investor sentiment and capital flows in the coming months. In contrast to Bitcoin's recent volatility, Ethereum has demonstrated relative resilience, holding its ground despite the broader crypto downturn. This divergent performance between the two leading cryptocurrencies adds complexity to the market narrative, with some analysts suggesting that Ethereum might attract increased institutional attention as Bitcoin experiences its consolidation phase. So, what's the overall takeaway from these market movements? We'll wrap it all up with a lightning round recap and your essential calls to action. And that's a wrap on today's explosive updates. We saw Bitcoin's fundamentals strengthening despite price consolidation, a potential whale migration from Bitcoin to Ethereum signaling a major capital rotation, Bitcoin's dominance dropping as altcoin season heats up, and a massive sell-off by Galaxy Digital highlighting market volatility. Don't miss out on any of the action. Make sure you smash that like button, subscribe to Bitcoin Bulletin for your daily dose of crypto insights, and hit that notification bell so you're always the first to know. Plus, follow us on all our social channels to stay connected. We'll see you in the next one.